Hello, Jesus. It's Andrew here. Welcome to Conversations with Coopman. Hope you're keeping well, and thanks very much for taking the time to speak to us today.
Thanks for the invite, Andrew. Happy to join you guys today.
Hi, Jesus. It's Mark here. Thanks very much for taking your time out of your day to come on Conversations with Coopman. We really appreciate your time.
I hope it's going to be an interesting and valuable conversation for the audience. I'm really looking forward to this one.
I'm sure it will be. Jesus, I've given the audience a brief introduction to yourself and your background, but perhaps you can just tell us a little bit more about your current role with Grant Thornton and what you're doing in that position.
Sure. Even before Grant Thornton, just give you guys a flavor of what I've been doing for the past years, which led me to developing a service offering at Grant Thornton. Before, I've worked in insurance, banking, and asset management for over a decade. Became a qualified financial advisor, chartered insurer, chartered banker, and within those roles was very much heavily on customer experience and data management. And data now is key in everything that everyone's doing in financial services. And then that led me to go and build a fintech. I was really looking at, how can we use current data sets that we have, transactional data sets that we have in FS, within a technology FX stack or financial services player, and or open data sets that we can bring in. And so the fintech focused more on bank insurance market, and it was using wearable technology. So we looked at smart cities and said, okay, what are the areas of smart cities? Smart self, connected cars, connected buildings, and we focused on smart self. And they did that for a period of 5 years. And then with that experience, understanding both worlds, both the incumbents in banking, insurance, asset management, build a fintech, I was headhunted by JT to build a service offering around open finance, which helps incumbents transform themselves by leveraging fintechs on a digital transformation journey.
Right, okay, very interesting. And sounds like you've achieved quite a lot in that 10 years. So obviously in your current role then in GT and then previous to building the fintech, you've obviously come across various different models that fintechs can adopt when they ultimately go to market. One fintech that's very well known and has a ever-growing presence here in Ireland is Revolut. If we break down Revolut's business model, in your opinion, Jesus, is that a sustainable business model that other fintechs perhaps should look to follow as well?
I think when you a fintech, in this case Revolut, when they were building their strategy, they were like thinking, okay, even if you look at FS, I will look at FS in a very simple way. There's distribution and there's capacity. And you want to be as close as possible to the customer. And there's a the capacity where you more of a B2B player per se. So I think Revolut, on their essence, they said, okay, I want to get as close as possible to the customer. I want to own the entire value chain in a way, as much as I can. So they went for a B2C model and they went for market share. And that's why people are saying, okay, if Revolut goes for market share, only just acquire, but without looking at the viability of the customers that they acquire and the model itself, will it be sustainable on the long run? I think that's the question everyone is really looking at answering. But if you look at it from a point of view of what they're executing on, so even in Ireland, there was a statistic that came out said they have over 1 million customers in Ireland, which is, Ireland, 4.5 million people. We can argue 20-25% of the market. They now have these customers, and they went for a land grab. In order to do that kind of land grab, you need to invest a lot on your customer acquisition, and you need to be more aggressive on discounting the service offering. Because when you want to acquire a customer is going to say, you're going to spend maybe 10-20 seconds on trying to understand your value proposition. And Revolut came with a very simple value proposition to the market. They looked at the market, same as I did with my previous fintech, and say, okay, where is the opportunity here in financial services that really a customer has a pain point on? That can really distill a message very, very quickly to acquire that customer, because we know our attention spans are reducing. And the actual value proposition was FX, foreign exchange. So everyone travels, and they know that the foreign exchange fees could be lower. So they were like, okay, we're going to acquire customers with reduced value, this value proposition with the reduced FX fees, right? So that was the entry, that was the wedge into the financial services. And as a customer, I look, okay, if I'm getting this value with Revolut, which is 20-25% less or even more, right, depending on markets, why is it this massive discrepancy? I'm going to try this service. Once you try the service, right, which Revolut then focus on the customer experience, and it's incredible the customer experience they've developed. And once you develop a customer experience, the customer can only compare it to what they have at present, right? Which is challenging as well. So it comes back to the customer expectations now have been raised. First, they get better value in terms of price, and then they get a better service in terms of customer experience. So Revolut understood that, okay, we're going to go wedge ourselves in an area which is going to be unprofitable for us initially, and then we're going to try and develop that service offering on the long run. As a strategy, then it becomes risky because when you acquire as aggressively that amount of customers, then you need to raise capital more and more until you bring other portfolios of products that is going to make your service viable. And I think the roadmap for Revolut is quite exciting because now they're looking at other areas like savings. They're looking at, again, their banking license in Ireland. Then they can take deposits. They're looking at other areas of asset management. And I think that could bring some elements of profitability to Revolut to answer your question, Andrew. I think on the long run, the customers they acquired and the insights they can gather to develop future products puts them at an advantage, right? And then by bringing other services, then the actual business become more viable. And Revolut are not the first that have done this. I don't know why people are very surprised about this. If you look at Tesla was the exact same thing. We're going to start with Roadster, and we're going to try figure out these electric vehicles, right? And that's going to be at over 100,000. So we're going to go for the high, network individuals. And then from that, as we understand the model, we can reduce our production costs and get more of the market. And then they have this massive advantage as well that they built in the self-learning capability that every car that is on the road is learning, right? And feeding them engine, the AI engine, right? That they have for this potential autonomous vehicle model. And same as Revolut, every interaction you have with that app, they're learning on you. So they know the products they could curate and produce on the back of that data. So it's not a new model. And I think on the long run, depending on the service they actually pick for their roadmap, they could reach that sustainability, Andrew.
Okay, it's very interesting. And I think you bring up some unique points around the access to the market and ultimately how they have penetrated and look to expand. If you look at Revolut then in the wider context in terms of fintech, which can include many different offshoots, some companies are at various different stages of the company life cycle. What would frame, or how would you decide or come to a conclusion that a fintech is successful? I mean, what does success look like for a fintech?
I think success is two things. First, I think for fintech, they have to really look at market share. How do I acquire market share to become meaningful? I think when Revolut came out, people like us were looking at Revolut and we were very excited about it, but it only became meaningful once they, as a fintech, when they acquired enough market share, and they were then causing really problems to the incumbents in terms of the actual money that's been transferred into that app on a daily basis. So I think market share is absolutely key because it showcases your success and market fit. And then for a fintech, I think that ingrained culture of regulatory compliance, because that's the challenge. Those are the challenges Revolut have had, in terms of being seen or and acting really as a bank, as a financial services player. At times in the fintech, like anything, is a startup environment. It's like, try trains, break trains, move fast, But when you're dealing with customers and their money, consumer protection really, really is at the forefront of everything you do, and it should be in the forefront of your culture.
And what should fintechs look to do first then? Sorry, should they look to gain their market share, then focus on regulatory compliance, or is it done in tandem?
I think it's done in tandem. When you're building that customer acquisition proposition, you really have to think about all the regulatory problems and frameworks that you have to put in front, as ingrained in your business. Just to give you even an anecdote from my standpoint, when I was building our fintech, our first hire was our chief compliance officer. And fintechs tend to hire first the CTO, right, the chief technology officer. But if you're looking at that framework, right, of how you build a tech company, for a fintech, fundamentally on those strategic boards, to have a very solid strategic board, they need that chief compliance officer really on board from the early stages, and that's how you embed that culture. And then you get the market share, and then you have less compliance issues, and then you can have less headaches when you go to bed as a founder, right?
Certainly say that again. If we look at the wider, I suppose, fintech space, it kind of opens up into the insurtech, and if we could use the example of Lemonade in the States, I think they were originally set up in 2015. I think they had over $70 million in revenue last year, quite a very fast growing, I suppose, insurtech. Do you see, I suppose, the landscape of insurtech changing over the years now?
No, I think it's a very interesting question, Mark. And on this, I always said, and even my background, it helps me see this very, very clearly. If you look at banking, what we're going to see now is the renaissance of bank insurance with this fintech movement, because it's about products and services. And after banking, the next product the consumer normally buys is protection, right? It's that protect the lifestyle. So if you're looking at that, I was privileged to work for one of the biggest bank insurance companies in Europe. I managed the portfolio across 9 European jurisdictions, and we dealt with a lot of data on that. And it was very, very interesting because you see the massive synergies within banking and insurance on a bank insurance module. And I think that's why we're seeing now the emergence of insurtech. There are clusters, big clusters we know in fintech like RegTech, but the natural, LendTech falls into banking. I'll say insurtech is a natural cluster, and Lemonade is that example. If you even look at financial services, $1 in $4 are spent by insurance companies. So naturally, if you're looking at the venture capital flow will flow to insurance. And we've seen that solid for the past 3 years, the growth there on the venture capital flow. And if we're looking at the venture capital flow, then we can see more experiments happening in insurance then. And more experiments will lead to more successes as well within the fintech space, insurtech as a cluster. And if we step back and we look at what did Lemonade do, coming back to a lot of people as well, I criticize Lemonade as they criticized Revolut at the very get-go. And I was I looked at the Lemonade's model, I was like, these guys are going to be incredibly successful. And now they have IPO'd. Everyone knows about the story. And even Daniel came in and he gave a very interesting stat from a venture capital perspective. So one of the early founders made 4,000% return, right?
Nice.
I need to find out who that guy is. Everyone would like that type of return, right?
Absolutely. That'll be Coopman in 5 years, yeah.
I tell you, that guy, we have no problem in setting up future funds. just put it like that. But when we repair it back, say, okay, insurtech, Lemonade, why were they successful? They looked at really the hypothesis within insurance, right? Insurance is about trust, but we now tend to not trust our insurer. The model itself, the business model itself, could be seen as conflicting because insurance is about promise, right? You give me a premium, and then I promise you I'm going to pay your claim when you have a problem, right? But then if I pay you a claim, I'm taking from my bottom line as an insurer, as an incumbent. So there's a conflict of interest there. And Lemonade was like, okay, fundamentally the model is flawed. Let's not even talk about the digitalization of insurance, but they worked on that as well. We're going to create this awesome customer experience, and we're going to make it a lovable brand, right? Well, the two main things that they worked on was trust, right? The business model is all about trust. So they built a trust model. And on the back of it, they gather a lot of data because the more you trust your provider, the more you share. That's the nature. And then the more they understand the customer, the better they can price, underwrite, and reserve. in insurance terms. And that's the thing that as an insurance person, I think it was a no-brainer. So it's one of those things that for you, like, what they're doing here is actually not too complex. They're trying to understand the risk better, because if they understand the risk better, some people might even say insurance is about risk arbitrage, right?
Okay.
It's about understanding the risk and being able to price that risk in a way that you can make a profit. And that's what the big, the reinsurance houses, that's how they look at the portfolio, really that basic, right? So Lemonade understood this, and they said, "Oh, we're going to reinvent it well, create a better experience, understand our customers better." I'll give you another anecdote. So they looked at the experience of home insurance contents they were in, and they were looking at the data points on a form. And the data points on the form, they estimated it was under 50 data points. When you fill out your actual application form, right, for contents at home, and they were like, "Oh, say, okay, interesting." First is paperwork. You can get it online at times, and they only gather 50 data points. Okay, if I build create a good experience on an app, I can gather more data and buy more data as well to augment those insights, right? So at the end of an experience, this is a stat from them as well. They gather over 1,000 data points in the journey. And if we're going to say, even let's say, right, that 75% is useless. Let's say that, right? So they still have 250 data points, which is 5 times more than normally their application form, right? And they will be able to use it because it's all digital. The way they will mine it, understand it, will be way better than having a physical form, application form. And that's that's the interesting part about Lemonade. They understand that the business is about trust. They understand fundamentally they have to really create an experience for a customer, and that resonates with the customer and breaks down the conflict of interest. And by doing that, they're going to get market share. And then, of course, we know the story about the US, and then they're now in Europe. So they do quite well, and now they have a ton of money to spend, right? So,
And now can reinvest and go from there. Yeah.
Because even on the viability, a lot of people question the viability of Lemonade, because they always say if you look at their reinsurance portfolio, is actually going the other way. But I'm sure at some stage as well, it will be like Revolut. They might flip that with new products, and the way as well that they start looking at the risk they bring into their book, right?
Yeah.
Because at the start they bring any risk into your book.
That's it, because the trust is developed at that point then, so the customer is engaged, you do have the opportunity to potentially sell more products to them, and whatever line of business that is, it all depends on whether or not the consumer takes it on. You mentioned there a lot of it is data driven, and it's very much around how the customer engaged more so with the company and within a fintech or an insurtech company. Would you think, so a lot of these companies, do you think there's going to be challenges ahead for these type of companies in terms of engagement from customers, especially if we look here, even just at the Irish market, the local market, like there's a huge distrust between the insurance companies and consumers at the moment. It's a huge political warfare. Would you see that as a challenge in years to come for people really to, I suppose, to take on a digital insurer, or would it be a Revolut or any digital bank?
That's the thing. We look a lot around this Grant Thornton. We look a lot around open finance, which how finance will look in the future. But even coming back to looking at the basic model again of insurance, insurance normally has 3 touch points with a client, between the insurer and a client, a policyholder. They have the sale, which there's a bit of a friction there because there's the element of haggling. So even if I feel I get out with a better offer after a couple of calls or a couple of interactions, however way I choose to interact with my insurer, I'm like, okay, why didn't they give that to me in the first place? As a customer, that's how I feel. I don't, when I go on the phone and then I get like 100 euros off, let's say, I'm like, okay, why didn't they give me that in the first place? Even though I got 100 euros off after the call, right? Renewal, the same process. It happens again. I have to call, haggle, and I get my price if I'm lucky, right? And these are the touch points for me. I think they're negative because that the customer doesn't really come out feeling that, okay, that was a fantastic experience, right? Even though they could at times be getting the discount. And then there's that element of a claim. That's another touch point. Something negative happened, so even if you try to change that into a positive experience, some negative has happened, and they expect a payout. So these are 3 touch points, and they tend to be negative, right? So who's going to win in the future has to bake in positive touch points to engage with the client, policyholder throughout the year. So there are different plays. People are doing wearable plays. People are doing a lot of IoT plays to create more Internet of Things plays to create more engagement. But those are the ones that are going to win, because I want to be contacted by my service provider, insurer in this case, and if you have a positive experience, by having that positive experience, I builds more trust, and then I can share more with them, right? And it's like dating. It's like it's like that, like first time you have that first date, you kind of like just chewing the breeze, and then the more you know the person, the more you share. I think we have to think about it that in this very very simple manner. Financial services is about relationship, right? So you have to build a very trusting relationship with your customer, with your clients. And I think in insurance, we've failed to do that as an industry. And there's a higher disconnect, which joking now, again, on the relationship, it could lead to a divorce, right? And in divorce, there's always a next person there waiting to, pick up the girl, right?
To pick the pieces, yeah. Well, hopefully there'll be more marriages than divorces in the insurtech world.
That's the thing. The process are divorcing for someone, and the fintechs and the insurtechs might be, be the next in line, for that marriage.
Excellent.
And when you look at where Ireland are at the moment, and you kind of pay attention to, the IFSC, which is over the last 20 plus years built out a strong foothold in sectors such as banking, insurance, investment management. With the rise of the fintech and the understanding of the importance of data and how companies are trying to adapt and, I suppose, keep up with the growing change. If we fast forward, say, 10 years' time to 2030, in your opinion, Hesus, what does the new IFSC look like?
I think there are different dimensions here, even for the companies themselves. I think the company themselves in financial services, I think culturally, there's a big piece there to be worked on. Ireland, in terms of culture of compliance, good regulation, stable, neutral, is there, which is great because we can ingrain this culture now into fintechs that trade out of Ireland. I think that's a massive advantage for Ireland. In terms of a sustainable operating model, I think we have to look at closely. There's another dimension that I think we have to really look at closely. How does that develop over the next years? How do we foster innovation, co-creation, partnerships with incumbents, and then help Ireland to be the gateway for Europe? Because even as of January 1st, if UK leaves, that could be seen as an opportunity as well. I know we added a lot of relationship with the UK. We have to create that bridge with the UK. It was the gateway to Europe, and I think Ireland becomes really, really an appealing proposition in terms of sustainable operating model. And I think we have to build our tech more, right? We have to be known for something. I think Ireland, we're not known for, if you say the likes of Israel, cyber, right? It's one of those things like boom, it goes to the mind. If you think about Estonia, is that ability of open source and data, integrated governmental structure, their digital citizen they've built. So as Ireland, we have to say, okay, what do we want to be known for, and build that tech behind. So I think data is a natural thing for Ireland. We have a lot of the tech companies here. We host a lot of the data out of Ireland. We have a lot of data centers in Ireland, and we're seen as a reliable nation as well. We can keep those. We know why they build data centers here. Is more efficient. Is more sustainable. It's better for the environment. I can name a lot of things why data should be housed in Ireland. Also from a jurisdictional standpoint. And then we have to look at capabilities, right? So how do we build the capabilities to support our technology play? In 10 years, I think we've achieved immensely, in as a building the IFSC. So before, everyone talks about the tax advantage that Ireland has. I think that is a factor, is a big factor. But we looked at how we made the university very, very affordable for everyone. We have to look at how we made English speaking is the first language now in Ireland. A youthful nation, we're able to adapt. We adapt quite quickly. COVID is an example. We're willing to experiment, and is enough of a size there is no systemic risk as well for Europe. So I think being able to foster that now and say we build this capability of IFSC, we've done quite well. We can look at the multinationals. There's a lot of stats out there that can validate a level of success of the Irish financial center. But now I think Ireland has to move into that next tech play, really, and then that's how we. When I'm framing this in these 4 dimensions, I think we have 3 of the dimensions really figured out. I don't think we have had our technology position, figured out yet as a strategy. And IFS 2025, I think, aims to do that. And there's some elements of data, cybersecurity, AI in there. And I think that's really, really positively received and welcomed by the industry, anyone working in digital transformation. But now we have to say, okay, how do we become known globally for that? And that's how Ireland will win in the next 10 years. It's really by bringing those 4 dimensions together and fostering particularly the tech digital transformation dimension, because that will trickle into all the organizations in the financial center, be it banking, insurance, asset management, and funds. We have very, very good funds industry as well. So normally you break out funds from asset management, you categorize them the 2. So I think that's where in the next 10 years how Ireland can position themselves as leaders at the European level.
That's great. Thanks for that. Just lastly, from my side, then, Hesus, as it stands on kind of, let's say, European or global stage, where would Ireland rank in terms of being a place to launch a fintech?
Depends what you want.
I want it all.
A lot of weddings. Actually, we have to use that one going forward. I love the analogy, but the thing is, it really depends on what you want, right? Because if you look into aggressively, build a fintech, I think America is known for that. They want to put a lot of dollars in, and they're going to figure out pretty quickly. And UK has had their successes as well, due to being one of the first jurisdictions to launch a sandbox out of the FCA. So they were able to do a lot of experiments, and we know the successes that we're talking about today, like the Revolut, the TransferWises, and so forth. That has been really, really great, for the UK. But one of the things for me is, if you're looking at building a very good sustainable model with a great framework and diversity, I think you have to look at Europe, because even Lemonade and the circle back, what Lemonade understood is, when you start looking at the data itself and you want to go granular, the diversity between the 50 states is not enough there, right? You're going to get to a stage that you're going to understand the behaviors pretty quickly of the 50 states. But if you want to look at globally, I really want to build something like a really powerful AI engine, artificial intelligence engine. You really need to look at Europe. And Europe, there's different behaviors in different states. Anecdotally, we know that the way the Irish behave are different from the way the German behave, the way the Italian behave, so forth. So if you really want to build something incredibly powerful within the space you operate in, and I think you have to consider Europe, because you want to get all those insights in order to calibrate your engine. So it really, from a business standpoint, if I was building a fintech today, I said, okay, I'm going to go to market and build a fintech. I'll raise capital in US and build it out of Europe.
There you go. Problem solved. For everybody that's looking to launch a fintech in the future.
You just have to convince your venture capitals, people are investing in the US, that's not the first market, right? Hard market.
Well, Jesus, look, it's been an absolute delight to speak to you. You've been very insightful and good fun, and I think you've really shed, a bit of light on the industry as a whole, and also how they're looking at things from business perspective when they look at the consumers. So on behalf of myself and Mark, look, thank you very much again for taking the time. We know you're extremely busy, so yeah, it is really appreciated, and we wish you all the best for the last few weeks of 2020
I really enjoyed
and
the
next year.
chat, Andrew, Mark. It was really, really enjoyable. Pity we have a limited time. If anything, we could have talked about the B2B models as well, but it was great to talk about the B2C models, and looking forward to hearing it when it airs.
We'll get you back on maybe next year, Jesus, and we'll
Yeah, that sounds good. Sounds like a deal.
Excellent.
Good man. Okay, look, all the best.
Thank you
Look
very
after
much.
yourself.
Thanks very much,
again.
Jesus. All the best.
Thank you, guys. Wait.
Thanks for joining us on Conversations with Coopman. If you are looking to hire excellent talent or considering your next career move in front office, risk, compliance, or accounting, please reach out to a member of our specialist recruitment team. If you have any questions about the financial services market, feel free to leave a comment below and we will get back to you soon. And if you like this podcast episode, we'd greatly appreciate a video like, or even better, subscribe to our channel to stay up to date with our latest releases.